Hey everyone, welcome back to the channel. This is Justin King again. If you've been following the real estate market, there's been a massive gap happening right now, and that's between what the headlines are saying and what real estate is actually doing when you get boots on the ground. Today I wanted to get my lender buddy Cody on here and just kind of rap about what we're seeing in the market, hit a few headlines, skip the noise of the media trying to, make things sound more grim than they are. Go over actual data, look at maybe why down payments are dropping to, new unexpected program that I think is really cool. And that's going to be the 110 buy down that's saving buyers, up to a couple $100 a month. So here's exactly what you need to know. We're going to get into this. If you have any questions as we're going, feel free to ask away. We will try and answer them live as we go. Before all that, my name is Justin King. This is Living in the Inland Empire. We are hitting these videos every Tuesday night at 6 p.m. rather. So make sure to hit the subscribe button so that way you are not missing out. Now, with that said, we got my lender on, Cody Olsen. Cody, you want to tell them a little bit about yourself, then we'll dive into this?
Yeah, what's up, guys? I'm Cody Olsen. I work at Secure Choice Lending. We're a broker based out of Riverside, California. I've been doing loans for, shoot, I don't even know how long, 8 or 9 years now. Um, so we have a lot of different options for people in loan programs, and we specialize just in mortgages. So we're not like your Wells Fargo or Bank of America where they're doing, you know, bank accounts and CDs and things like that. We specialize 100% in mortgages. So we're seeing a lot of the market and, paying attention to all the details.
Nice, exactly. That's why it's important to work with a dedicated professional. First thing I wanted to get into is there's been a lot of chatter for a long time about possibly a new Fed chair coming in. Looks like that actually finally happened, right, as of Monday.
Yes.
Okay, so Mr. Kevin Warsh,
Yep.
what do you think we can actually expect from this? Because there's been a lot of, Jerome Powell didn't do something right. Jerome Powell, it was his fault that things weren't going the right way. I
I
mean,
agree.
realistically, we know where we're at. Is there anything this guy can actually do to kind of restabilize housing? I mean, I think housing's actually been stable, but make it more affordable or more enticing or attractive to the actual consumer.
It's kind of a double-edged sword in my opinion because I don't think that Jerome Powell technically did anything wrong from a market and strategy standpoint. And what I mean by that is he did everything he said he was going to do. He's a very strategic, smart guy, and he was moving the needle slowly because that's really what we need right now. We saw what happened during COVID when rates went to 3%. And not that people aren't like, oh, I wish the rates were 3% again. Well, do you want 35 people in front of you at the open house that you're trying to buy and they're all going 40, 50,000 over appraisal? We've talked about this before.
Hmm.
That's what would happen. And I think the repercussions of that happening again now would be even worse. Um, so I don't think Jerome Powell did anything wrong. What could Kevin do now that would really change it? I mean, everyone's just saying, hey, he needs to drop the rates. Fed needs to drop the rates. Fed needs to drop the rates. It's not necessarily the answer. We'll see. I think he's going to drop the rates. When he came in as chairman, the market didn't actually react well at all, which was surprising to me. The rates got pretty bad. Not like they went from 6 to 8% or something crazy like that, but markets did not. It seemed that there was a big disruption, so that was pretty interesting to see as the
Okay.
first initial reaction.
Yeah, we'll get into rates here in a second. To piggyback on what you were saying with Jerome Powell, like I mean, he literally did everything he said he was going to do. He kind of inherited, not inherited. I mean, he was in there for the whole time. The COVID thing. We all know they kept rates too low too long. So if you
Right.
took advantage of that, awesome. But they had to do something. He was the phrase was soft landing. I mean, we didn't crash, knock on wood. What we figured out was when he was saying something, it's oh yeah, this is actually listen up because this is what's going to happen.
Right.
So I'll give the guy a lot of kudos and a lot of respect for that. I know he gets a lot of hate, but I don't think he did a terrible job by any means.
No, I don't think so either. I think he did everything he said he was going to do, and I think his strategies worked. And um, I think certain times during the Fed meetings, some of his comments were a little scarier than they needed to be, meaning when he went up and spoke. and that affected markets in a way that might have not necessarily been absolutely needed. But other than that, I mean, again, that was just him being honest and what his true thoughts were, which is not a bad thing. So I don't think he was a bad chairman at all. Some people think that he should have moved faster as far as rate cuts or things like that. But I mean, we're not in a market where you really want to do drastic things like that super quickly.
Yeah, and we were just coming out of a market, where things were changing quickly and aggressively, and I mean, really, it kind of helped amplify with what we're dealing with now. It's back in 22, 21, we'd be looking at rate cuts, and it was like it moved 0.75% today. That the really the status quo for the last 3 years now has been, a tenth, maybe a 20th.
Right.
So, like, in my opinion, it kept things a lot more stable than obviously, 3, 4 years ago.
Right.
That's why, I learned to respect him. Like, when he say something, it's like, okay, this is exactly what we can anticipate. And then you get, the media or the TikTokers around it, and they're like, oh, we're going to see this. And it's like, no, that's not at all what he said. What he said was, we're expecting, 4, maybe 5 rate cuts next year, but they were very, very nominal or incremental. So I really am curious to see what the new guy does. I know he's going to catch a lot of pressure from the White House, like a lot. I saw a projection or heard a projection the other day was that they're going to lean on him to get a 500 basis point cut, come July. That's not in housing. That's going to be business to business. But obviously the anticipation is that will trickle into the housing market.
Yeah, and they were pressuring Jerome Powell that same way too, and he wasn't going for it because he knew it wasn't the best thing. So I'm not saying that they shouldn't cut more than they are now, but I don't think that they should be doing anything extremely drastic moving forward, being the market that we came out of and that we're in now. I think whereas the rates are a little on the higher side, I think with the combination of houses sitting and buyers getting more seller credit, we are starting to see some more stability.
Yeah, and for me personally, I like the predictability of it. I like being able to speak to, like, okay, this is where we're at. For the last 6 months, this has been the trend. Going into a cycle or, sitting down with sellers or buyers and saying, 3 months ago is completely different than what we should be looking at. I really think the last year it's a little more, it's a little healthier. It's
Yeah.
easier to predict. It's not, this month we're like in a free fall, the next month we're like in this crazy super incline. So I think for the buyer and seller, it's kind of okay, like, this gives us a much better reference. If we're looking in August but not planning to do anything until February, we
Right.
have a better picture of where we will be at.
What has you and Allison's sellers' reaction been, and how has it changed over the last 6 months? Because I know that those conversations are much different now.
That's a really good question. What before, like, okay, like, we're in 2020, this is May 2026. So prior to like December, it was just kind of like, okay, we're looking at a 3 month. Normally we like to look at a 6 month overview. Right now we're looking at 3 months. These are conversations in 24, 25, just because the market is so finicky, so what's the word I'm looking for? Not hostile, but just, things are changing so quick. Now we can actually look back at 6 months and, like, I'm my head's in this enough that I can say, okay, 6 months ago, this is where rates were at. This is what the Fed was saying. These were the loan programs available. So I still frame a seller appointment in a 3 month increment. If I need more data, I'll go back 6 months.
Got it. Okay, that makes
But
sense.
I can say days on market 6 months ago were 14 days. Now we're more in a 45 days on market. So
Right.
we don't know where it's going to spin to. Technically, I think we're just coming into the spring market. Like prior to last year, the spring market really didn't kick off until May, June. It's like people were kind of waiting. Go back before COVID, spring market was always March. Always. I think this year we have a delayed spring market. I will blame that on the Iran conflict. Not blame it, but just attribute it to that.
Definitely a
Because,
factor. Yeah.
yeah, I mean, like, we've talked several times, like, December, January, we were busier than we've ever been in any December, January in history. Things were trending up really aggressively come that conflict, which kicked off, what, second or third week of March.
Mm-hmm.
The market
Yeah.
reacted hard. It stopped.
Yeah. 100%.
It stopped. But and we're about 60 days past that now. I'm noticing a lot of folks coming back into the market, more than buyers coming in, just straight buyers. I'm seeing a lot more listings where
Mm-hmm.
people actually interested in like selling their home to do something else. So that interest rate stigma that we're waiting for, a crash or a crazy aggressive seller's market. I think that's erasing. So I think we're going to see a lot more contingent sales coming up.
Yeah, that's actually really common right now. It's funny you say that. I have some people, I have two or three different families that I have approved contingent on them selling. And even a couple of them have their offer accepted on a new house that was, again, 20, 30 days on market, but they still need to sell their house. So the contingent sales are still happening. They're just the time frame's a little extended now. But then
Hmm.
going back to what the rates being stable, it's not, or overall fairly stable. It's not a big issue. Like the rates aren't spiking up super fast to where I'm gonna have to have a conversation with them when the house finally sells or whatever the case is. So it's overall, I mean, it's slower, but it's stable.
Yeah, that's the way I see it. And I'm seeing a lot more sales being contingent, meaning contingent that the buyer has a home they need to sell to get into
Hmm.
the next one. I did a full breakdown on it last week on my live. If anybody's watching, reference that. If you want to talk specifically, reach out to me directly. But I'm seeing a lot more of that, and I think the people are just getting tired of waiting for that lower rate.
Uh-huh.
To kind of credit Jerome Powell or the Fed, whoever gets to wear the hat for that and get their flowers, rates have been stable for the last 2 years.
Yeah,
I
I
mean,
agree.
coming out of 20, was it 24? We were seeing 7.5, sometimes 8%. We've been at 6.3 if you just average it out over the last 18 months to 20 months.
Literally. And another thing too, I think with that higher, the rate, a 6.5 or 6.25 rate is only, people only call it higher because they're comparing it to a 2.5 or three, which was when we were in COVID. So it's not really overall like the economy operates very well at about a 5% mortgage rate average, like
Hmm.
historically. So I think with the quote unquote higher rate, the the buyers are getting more seller credit more commonly now, which is not only lowering people's payment, but lowering their cash out of pocket needed to buy their new house. So there is still good incentives to be had. It might not just be seen in just the rate itself.
Yeah, 100%. Like on the listing side, when I'm representing a seller, when we have an offer come in at full price and they're not asking for closing costs, like that's a huge win.
Take it. Yeah.
Huge. Huge.
Hmm.
Like I said, we're in May of 2026. Go back a few years ago, that was like, okay, we've been on for a while. We might want to start entertaining closing costs or a price drop. But right now, if I'm getting something within about 2 to 3 weeks at asking price with no closing costs, like, okay, cool, this is good. I mean, as long as the financing makes sense and
Right.
it's bulletproof, because I'm seeing a lot of wonky ass pre-approvals coming in right now.
It seems
Uh,
like there's a pandemic of weird approvals out. I've had multiple agents calling me saying, "Hey, can you cross all this?" And I'm looking at it like, how did this even get out of someone's like, how did this even get sent out in the first place? Like, why is this person even shopping? It's weird. I don't understand where that stems from, but it's definitely a big deal.
Yeah. Yeah, I mean, we just had that one where we were looking at it and they were a 3.5% down payment. And when we looked at the credit scores, like, you need 10%. And the lender was scrambling. She's like, oh, no, no, they're fine. I do these all the time. Like, and I had to talk to you about it. I'm like, that doesn't make sense, right? So, no, you need 10% with a, sub 580. So I'm seeing that a lot.
Yeah, it's
I don't know if it's
strange.
just more amateurs in the business or if it's just people are getting desperate.
Or
I don't remember where
both.
we're going
Yeah.
with that, but just if you do have a house listed and you're getting offers, make sure that they are legitimate. Your agent
Yeah,
should be
especially
doing
right
that.
now. For some reason, it's like, I don't know why it's getting worse. Technically, when the market, when there's apparently less buyers, that goes away. But it seems like lately there's not only a ton of people that want to buy, there's a ton of people that aren't really approved too. Or they could be approved, they're just not approved the right way right now.
Yeah, yeah. I mean, there's always a game plan we could put together for down the road. Just a pre-approval
Hmm.
is yet never yes or no. It's this is what it is right now.
Hmm.
With that, let's go into rates a little bit. That's always the big question.
Hmm.
Where are rates at? Last week we saw them jump around quite a bit. I just pulled up Freddie Mac's website.
There you go.
This is pretty accurate for right now, right?
Yeah, this is close. I mean, this is going to be your national average. So you're going to have lenders that are higher than these rates you're seeing, and you're going to have lenders like Secure Choice Lending's lower than the national average because we're a broker. So I mean, we're probably 6.25 is probably our 30-year average, where this is showing 6.51. So but this is super close.
Okay, so with that, let's go into the 1.0 buy down program because I
Yeah,
really like that. I think that's such a win for the consumer right now,
it
or
is.
the potential shoppers and buyers.
Hmm. Yeah.
Because like he was saying, like if you look at the website we just showed, it was 6.5. Freddie Secure Choice is about 6.2. So why don't you explain? I don't want to speak for you on this one.
Yeah, so basically, let's say you come and get pre-approved by me, call me and we approve you, and you're ready to go shopping for your new house, and we approve you at a 6.25% interest rate. Well, UWM, United Wholesale Mortgage, I'm sure there's a couple other lenders doing it. That's one of the main lenders we work with. They're the biggest in the nation.
Yeah,
They're
owner of the
offering,
Phoenix Suns, Mr. Matt. What's his Matt
yeah,
Ashiba?
Ishbia, yep.
HBA. Okay.
Yeah, owner of the Phoenix Suns, that's right. They're offering a free 1.0 buy down. So what this means is if you're pre-approved at a 6.25, that first year of your mortgage, the first 12 months of 12 payments you make are going to be at 5.25. And that's a big difference on your mortgage and going to save you a lot of money in that first year. And to me, this shows a couple things. First of all, it shows that the consumer is getting a great deal for literally free, by the way. Costs the consumer nothing, zero. Doesn't cost the seller anything. It's 100% paid by the lender. But it also shows something else, and I was thinking about this earlier. It shows that the bank knows that within the next 12 months, the rates are going to be lower, or else they wouldn't be offering something like this. Because they know that people, when that rate goes back to 6.25, for example, all those people are going to come back and refinance. So, like, yes, they're doing it for free up front, but they know later on that these are all going to be refinances, which they will. So it just shows that they're expecting lower rates in the future.
I love that you said that and kind of framed it in that way because the bank's not going to typically the banks aren't going to bet on a loser just to stay in the market.
Correct.
So I love that you said that because this is a great indication that they're anticipating, or maybe they have some sort of knowledge that we don't have access to, that
Right.
rates in the next year may be coming down.
Yeah, because if I'm a bank, if I'm UWM and I'm offering a 1.0 buy down, let's say that costs me on average, I would say on average it probably costs them $5,000 to $6,000 per transaction to do that for people for free. I'm not going to do that unless I'm banking on rates coming down in the future. If I think rates are going to go up in a year, I'm definitely not going to be offering that.
So
So,
another thing I really like about this too is a lot of attention, a lot of reach outs, a lot of traffic I get, from just my phone ringing, especially with this page, some of my short form stuff, is people like new builds. The reason they
mhm,
like the new builds is because they're throwing everything under the sun at them. I mean,
100%.
within reason. Rate buy down, cash to close, sometimes appliances, sometimes window blind, whatever. This really makes the resale market more attractive.
It puts it back in the game a little.
Yeah, as it should, because I mean, you're a lender. We do a lot of, we work together a lot, and you've been getting your ass handed to you by these new builds.
Yeah,
Not to kick you while you're down, but
it's true though. Yeah, 100%.
it's hard to compete with. And the pros versus the cons on the new builds is, we've covered this ad nauseum. New builds, you're gonna have higher tax rate. You're almost always gonna have an HOA. You got no landscaping. You're starting from scratch, which nothing wrong with that. But if you don't want to deal with those issues, it creates a whole viable option, in an existing home or an existing track that you didn't really have the option on before.
Right. Yeah, and already you could, if you have two $600,000 houses side by side, and one of them's a new build and one's a resale, already that resale house payment is going to be cheaper due to taxes, HOA, solar, so on and so forth. But now the resale house for the first year is going to be even furtherly cheaper And again, I just like what it represents. That to me, it means the bank knows that rates are going to come down in the next year. So, I mean, the problem too is that, like, for example, if you go buy a new build, let's say you have a new build, you love it, and you're not super comfortable with the payment, but they're offering you a rate incentive of 3.99 fixed for 30 years, you're not gonna probably get that payment lower ever. So you better make sure you're okay with that payment. Where if you buy a resale, you can, if you get a 6.25, you're gonna get a lower payment in the future because you're gonna be able to refinance. And we're seeing that now with these incentives that the banks are offering.
That's a really good point. I mean, because prior to this rate market, it was always like, okay, if you can afford the 30-year, but I mean, really the sales point, and I freaking hate saying this, has been, okay, this is where it's at now. We know rates are going to come down eventually. So it hasn't really been phrased in that way in quite a while. So I do like that you said that because, yeah, with that new build, if you're getting that 3.99, I know some that are offering crazier stuff, but like
Yeah,
there's that one that's offering a 1.9 for as a 3-1 buy down or 3-2-1 buy down. But
that's crazy. So that's a
yeah,
499 or what, a 399.
3.99, 1.9 the first year, 2.9 the second,
That's
which
crazy. But you have to make
it's it.
sure you're okay with that 399 because
Mhm.
that's probably it as far as lowering the payment.
Yeah. I mean, you're probably never going to refi it. I mean, unless
Mm-mm.
you're doing a 4.5 just to re-extend the loan and do cash out.
Mm-hmm.
But I mean, just the framing on the way people afford homes the last 3-4 years has completely changed.
100%.
Uh, yeah, I don't want to go too far into that because that's a whole other topic.
Yeah, for sure. But I mean, I think it's interesting, and I think that this 1.0 buy down is a big deal. Like you said, it puts the resale market back in the game, competing against new builds, and that was part of the point too. And I think it's really going to be good for buyers. And why not save two, three, $400 a month for the first year on your mortgage? Like it's a lot of money.
Oh yeah. I mean, usually when you get into your first home or second, your house poor for a while until
Hmm.
your income and bills readjust. But I really wish they had something like this before. I know there's been a lot of chatter and kind of these made up scenarios with like the assumable, not the assumable, but the traveling mortgage, the 50-year
Oh,
mortgage, and we've
yeah.
covered all that on here. It's just it really doesn't make sense for the market. So something like this, where the private sector has figured out an alternative to what's going on with the federal is beautiful. I love seeing it.
Yeah, and I think because the reason for that too is like the 50-year mortgage or the portable mortgage or whatever that rumor was going around. Those are long-term things. I think they finally looked at it and said, we need a short-term fix. Like we need to fix this for them starting now for the next 12 months. Like what can we do to give people some relief? And this is it. And it's a great thing.
Yeah,
So,
no, it's fantastic, and like I said, I love that the private sector figured this out, and they have their incentive behind it, but it makes a whole market that wasn't accessible to folks before more accessible.
right. 100%.
So the next thing we'll go into is anything else you want to cover on that? I mean, is there any stipulations with that?
No.
Anything out of the ordinary?
Nope.
So
It's
what
just
1.0
free.
buy down is that FHA loan or conventional? You can use it on both.
It's FHA conventional VA, yeah.
Okay, no normal qualifying
Every,
programs.
everything's the same. DTI is the same. Credit score is the same. It's literally standard.
Okay, so DTI FHA 56.99, conventional
Yep.
50%.
Yep.
Yeah, cool. And then is there any income guidelines with it, or is it just
Nope.
follows the whole thing? Okay.
Yep. Follows everything. Yeah, that's it. So yeah, it doesn't have any stipulations or any added overlays, anything like that. It's literally just for everyone.
Okay.
So there's
And then
literally no
just
strings attached.
to reference numbers on this, somebody's looking at a $600,000 house, market rate 6.5. Secure Choice is able to get them down to 5.5. Roughly, what would they save monthly on that?
You're gonna save about $450 a month
Down.
for the first year. Yeah. So, and that's at the cost of United Wholesale Mortgage. So, like I said, it's not a cheap thing for them to be offering. I mean, I'm sure they have ways on their end of making it cheaper, but it's still something that is a big investment for them. So, I know that they know something about the future market that we don't.
That's actually awesome.
Yeah.
Okay.
So,
Next thing I want to go into, down payments, actual cash out of pocket for down payments is at a 4-year low. Let me pull up the screen.
Yeah, I actually have been seeing that firsthand. I mean, so have you. We all have.
Yeah. So I just wanted to talk about why this is and kind of speculate on if it actually means anything or if it just means. I don't know. Let's get your take on it, and then we'll
How
dive into it.
how is this? How do they phrase it? Let me see.
Median
They're
down
saying
payment on U.S. home was 23.4, lowest level since 2021. It's the fourth
so they're saying
consecutive
people are
quarter.
having to come out of pocket with less money than they did before.
Essentially.
Okay. Yeah, I believe that.
Okay. So I'm thinking the reason for this is that they didn't have any data as to why or what loans. I'm thinking more people are using down payment assistance.
Maybe it's possible. Um, I think it's, I think there's a major increase in seller credit. That's like a big one right now.
There actually is a huge increase. I think I covered it last week, but about 44% of transactions across the U.S. Had some sort of seller concession going the other way, and that's closing costs. That's not commissions. About 44%.
Yeah, I mean, almost all the stuff that we have people shopping or putting offers, they're asking for credits and some of them are getting them. You know, I have other transactions where people are getting closing costs. Like, I believe that stat for sure. I think there's, like I said, I know the rates are not low compared to what people want, but I think there's good incentives like this in the market where you're not going to have to spend as much money to get in your house, which is a good thing.
Yeah. And for reference, this is saying the median down payment was about 23,400. I know I talked to a lot of folks where they think they need to come in with like 20% down, which
Yeah.
on a $500,000 house is 100 grand. Uh, on average, folks are getting in for just under $25,000. So, reason I say that is because for a lot of people I talk to, home ownership, or if that's the goal, it's way closer than $100,000 down payment.
Yeah, and I think that sellers are offering this because, I mean, they know, with like the costs of things going up and people don't have as much cash on hand, and it's a good incentive. Like, hey, we'll pay for some of your closing costs or all of them or whatever the case is, and it helps people be able to get in and make it easier for them. So everybody wins still.
Yeah, and I mean, for stuff like this, the conversation I'm having out there is we all know rates are higher than they have been in the last 15 years. Affordability is at an all-time high. I mean, property values are higher than they've ever been.
Yeah.
So, if you're a buyer looking to come in and if you're a seller entertaining offers, most folks are barely getting in. They're
Hmm.
begging, borrowing, and stealing, 401k, family gifts.
Everything.
So, stuff like this, it's like, okay, sellers are being perceptive to this because it's keeping the market moving forward and keeping their goals in line. It's just restructuring what they thought before. And sitting down with a lot of sellers when I'm explaining stuff like this, they're like, yeah, we've been seeing that, we've been hearing that, so we kind of anticipated something like that.
Yeah. And another thing I was thinking about, I did a transaction in Oklahoma this month. I have an agent out there. Long story, but he sends me majority of his buyers, a lot of VA stuff out there. Um, the rest of the world's market is much different than ours because we're in Southern California. So this is gonna be, first of all, everyone wants to live here, whether they admit it or not. They do, because you have
It's
everything
true.
here. It is.
I mean, it's Southern California, like, it's a dream, right?
Yeah, it is. It's the literally the mecca of real estate. So, and what I mean by not everyone's market is the same is like the client that we helped out there bought a house for $400,000 and it was like insane, gorgeous, like 2,900 square feet, beautiful home. But like the taxes are cheaper, the transactions, third party fees are less. Like everything's less in those markets, and that's the majority of the world aside from California. So I think that goes back to making the closing costs out of pocket cheaper, not only for the rest of the world but for us too. Like you have to make it a little more tangible for people because this is already such a challenging market for buyers and sellers.
Yeah, I mean, days on market up for sellers.
Hmm.
Reason for that is, I mean, the buyer pool is just continually shrinking.
Mm-hmm.
I did see a stat that every time rates go down, I want to say it's 0.5%, about 1 million new buyers come back into the market.
Mm-hmm.
Or I mean, it's somewhere between 500,000 and 1 million buyers are
That's a lot.
reintroduced into the market just on the affordability aspect alone.
That they can actually qualify now and get something that they would actually want to purchase and things like that.
Yeah.
Mm-hmm.
Next thing I wanted to cover, I think I lost my slide for this, but I saw another stat that, yeah, I lost the slide for it. Alternative loans or kind of, loans more in the gray are like on a 10% rise this year. For
I'm
like
assuming
business
they're meaning
owners,
like
1099
non-QM
people.
loans or like bank statement loans or P&Ls.
That's it. And I'm seeing advertisements and I'm getting hit up from lenders like crazy about, oh, we can do this, we can do that. Meaning do this with like a bank statement loan or offer this on a
Yeah.
1099 loan. Are you seeing that too?
I mean, the truth is, and like we offer all that stuff, and I've done them. I've done bank statement loans. I've done DSCR, no income loans, meaning you don't have to show any income, 25% down, as long as it's an investment, no questions asked. Like we've done all these tricky loans, profit and loss stuff. Like we have all these programs. I don't advertise them because it's like under 5% of the total market. Like your average person is doing FHA, conventional VA, you know.
Hmm.
So that's what we advertise because that's your everyday guy. But yeah, if we have to go into like these special kind of loan programs, we absolutely have them. And I've been seeing brokers that we work with push them a lot harder lately and like try to say like, oh, we got this bank statement deal, blah, 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 blah. And it just shows you kind of like they're reaching a little further now.
Yeah, yeah. Like we were saying, there's a lot of spotty pre-approvals coming in, or a lot of spotty buyers coming in on the loan side. Typically what happens is lenders get a little bit slower, so they start looking for more of those kind of unicorn products or
Hmm.
stuff more in the gray to help more folks get in.
Hmm.
Uh, like I was talking to a lender earlier today about CalHFA, and he was just like, "Yeah, that's all I do." And I'm like, that is rare. Most lenders don't only do that. He's like, nope. He's like, I just got specialized in it. He's like, I just advertise that nonstop. So that's all I do.
Yeah, I mean, like I said, like we do all that too. Like we do those, and I've done them, and we do all the non-QM stuff, and it's just not from what I see. Maybe because I don't advertise it, but I don't see it as commonly, so it's just not what I advertise. But yeah, I mean, we have all that stuff too, and I know people like certain things. Like there's people that specialize just in reverse mortgages. Like everyone has their little thing they like. So I mean,
Yeah.
to each their own, definitely.
Yeah. And what CalHFA is, you want to like just briefly touch on it. I try not to like just reference something and then just jump to something else.
Yeah.
Because a lot of people don't know what CalHFA is.
Yeah, CalHFA is a down payment assistance program through FHA, and it's basically there's a grant, and it's either forgivable or repayable, and you get a certain amount of your down payment and or closing costs granted to you for your home purchase. So the idea of it is to lower your cash out of pocket and make it cheaper for you to get into your house.
And then the caveat is,
The caveat is that, well, A, the fees are higher than normal, the rate's higher than normal. CalHFA sets their own rates. So whether we just saw 6.51 earlier, CalHFA would have a completely different rate. They can make it whatever they want. They try to not be much higher, but sometimes they are. I've seen them fluctuate.
yeah.
And then
Yeah,
there's
I've seen
some.
it. Usually it's within about like point 0.3 to 0.75 from what I've seen.
Yeah, I agree. And then a big one too, and I don't know if it's all of them off the top of my head. I know that at least a couple of the CalHFA programs have a 120%, or actually I think it's 80% AMI max, area median income max. So you can't make more than 80% of the area median income. And that number could be higher, but what that
Okay.
translates to is sometimes the income limit is too low to qualify for the purchase prices in this area.
Yeah. Yeah, I
So,
believe Rivers. I can't remember what Riverside is. Moreno Valley. I think the annual income's about 110, 120, somewhere around there.
yeah, so it would
Uh,
be 80% of that, so
yeah, you're not gonna
90,000.
qualify for a house.
Right, and then the other thing is they have a 45% debt to income ratio max on some of them. We
Yeah.
actually have some other programs for down payment assistance that isn't CalHFA through Kind Lending that is much better. So when I have someone that needs to do that, I definitely look into it for them because it follows more AUS, like it follows DU more than, its own deal. So it's more like cookie cutter guidelines just with down payment assistance, which is,
Yeah, if you guys have any questions on that or any interest in something like that to see if it would fit for you,
yeah.
Cody's information is below. I actually love working with programs like that because I like getting a little more creative and
Mhm.
trying to figure things out. Cookie cutter's cool, but I enjoy learning about just the random stuff, that we have access to.
Yeah, and like I said, we can do CalHFA. I don't think it's the best down payment assistance program out there, especially with the different things that they're starting to roll out now.
Hmm.
But it's an option, and it's basically like I kind of see it as like Old Faithful. Like it's always been there. It's as old as time. It's just something people have always used, and it works great. But now I think it's starting to evolve where there might be some better options now. So again, we could always look into that too.
That's a really good point because I mean prior to like 2020, 2021, CalHFA was my bread and butter. I did those all day long. I mean,
Hmm.
probably half my deals from 2016 to 2019 were down payment assistance programs.
Hmm.
And I've noticed that they're not as popular, but I think it's more of an affordability versus, like you were saying, the average median income versus the actual price of the home is just knocking a lot of potential buyers and homes off of the program.
Right. Yeah, 100%. So those are all just things to consider.
So okay, cool. I mean, that's all I had on my outline for tonight. Was there anything else you wanted to cover? Maybe something we didn't mention, or anything crazy you're
There,
seeing in the market?
other than the 1.0 buy down, there hasn't been a whole lot going on from a mortgage lender standpoint. I know there's usually some big news and all this crazy stuff going on. We haven't had much interruption in the market, which is not a bad thing. It's
No, it's
not it's
cool.
not
Just
bad.
just let the market be the market. We don't need a bunch of freaking big heads in there screaming about how much better it used to be or how much
Yeah,
worse it is now than what. It's just stop. Just okay. People need to buy and sell. They need a place to live.
yeah,
Quit trying to make
100%.
people feel
So,
bad about it or second guess it.
or scare them, yeah. So no, I
Yeah.
mean, I think the 1.0 buy down's a big one right now. That's going to be awesome for people. Um, and I think the cash to close out of pocket being lower than it was prior is an important key factor. That's a big one. I think that that's really important for people to know that you don't have to come out of pocket with as much as you used to. That's a big incentive. So if you combine that with the 1.0 buy down, I mean, it might be more obtainable than you think to buy a house right now.
Yeah, I mean, as you were saying, it's about a probably on what do we say? Our example is a $500,000 house. That's about a $450 savings.
It's a big savings, yeah. So that's for the first year. So I mean, you're saving $5,000, or whatever it comes out to be, 5,000 or 5,500 bucks over the first 12 months. So,
Yeah,
I
it's
mean,
patio cover. It's concrete.
yeah, yeah,
It's
literally,
flooring.
yeah. That sweet furniture you want or whatever, yeah.
Yeah, yeah. So if you don't want to do the Wayfarer thing, it's something actually nice.
Literally, yeah. So, yeah, I think that's all good stuff.
I'm
I think the
kidding.
market
I
could
have
be,
Wayfarer shit at my house, so
I think I do too. I can't
yeah.
remember.
So
But
yeah,
yeah,
no hate at all.
nah, it all works. It all works the same. Um, Yeah, I think we're heading in a good direction. I think based off the amount of approvals I've been getting lately that we're gonna see some good action this summer. And I think it's probably gonna get busy, which is cool. Or busier, I should say, because kind of, you can always tell a couple months prior what the next months or next season's gonna bring. So I think we're heading in the right direction.
Yeah, I feel like like I was saying in the beginning, like we had this just it felt like there's this surplus of activity in the market, and then it just kind of fizzled. It
Mm-hmm.
died, but I'm feeling like I mean my open houses have been busier, my signs have been getting more calls.
That's good.
This channel has been getting more calls, so it just seemed like just things were like flat, and we are all kind of like,
Yeah.
what the heck? What happened? What's going on?
Yeah.
My feeling with what happened in March, April was where people were like, oh, we need to wait and see what's going to happen because if we're gonna be in full scale war,
Right.
that's a completely different market.
And from a
Rates were
consumer
trending down.
standpoint, it's not, it's a fair, it's a fair way to look at it from a buyer standpoint. I mean, would something drastically really change other than the Fed probably emergency cutting rates? Probably not. But I mean, as far as being a buyer and something like that happens, I mean, yeah, I might be like, oh man, that's kind of scary, let's see what happens. But I mean, sometimes people get carried away and then they wait too long. Then like, oh, it's been 6 months since I've heard anything. Maybe I should think about it now. It's like, well, now even more has changed than you were anticipating.
Yeah, I mean, I get folks that are waiting 4 or 5 years.
Yeah, that's insane. You could have been sitting on 200 grand in equity or, 150,000 in equity already.
Yeah, yeah. I mean,
Yeah.
you live and you learn, right?
Yeah.
What's the saying? When's the best time to plant a tree? 20 years ago.
Yeah.
When's the second best time now?
Today.
Um,
Yeah.
yeah. So yeah, I mean, yeah. If you don't have anything else, thanks for jumping on, man. I always enjoy being able to like just kind of rap with you on these.
Yeah.
Um,
For sure. It's
it's
fun.
Yeah, no, I just enjoy talking shop and kind of getting somebody else's perspective on what they're seeing and what they're experiencing.
Oh, yeah. 100%. I agree.
So cool. Yeah, I don't see any questions, so I'll wrap it up. If you made it here with us to the end, thank you guys so much for watching. Any questions about that 1.0 buy down, which I will highly suggest take advantage of before you start seeing it more and more. For a buyer, what that means for you is when you're competing against somebody else on another house, if you're in that situation, you have a leg up on them. You're saving money that they're not saving.
Hmm.
Any questions I can help you with? We talked a lot about listing homes and doing contingent sales, or just trying to weigh out the cons between new builds and resale. I'd love to chat with you. I have a Calendly link in there. My information is below. Cody's information is below. We both do this full time. If you hit him up and he doesn't get back to you, let me know. I'll give him shit about it.
Won't happen. Good luck.
So, anyways, thank you guys again for watching. Hit the subscribe button. We do these every Tuesday. Saturday, I have my long form content. This Saturday, they have a property tour up in Moreno Valley, or pros cons of banning. Not sure which will get edited first, but again, thank you guys for watching. We'll catch you on the next one.
Thanks, guys. Catch you on the next one.